Welcome to Nasdaq Trade Talks. I'm Jill Malandrino, global markets reporter at Nasdaq. Joining us for this segment, we have Carlos Pelaez. He is the senior manager of ETF listings with Nasdaq. Carlos, it's great to see you again. Welcome back to Trade Talks.
Thanks for having me, Jill. It's exciting to be here and a great time and topic to talk about ETFs and our new DLP program.
Yeah, all right. Always a good time to talk about ETFs. Last time we spoke, you were announcing the launch of the newly designed Designated Liquidity Program, or what we call DLP, for Nasdaq Listed ETPs. Can you refresh us on the structure of the DLP program and why the ETF listings team implemented these changes?
Yeah, so we successfully launched our new DLP program on May 3rd, which was focused on improving market quality for all ETFs listed on Nasdaq and specifically modernizing how market makers are incentivized in that program. So we worked with issuers in developing a new program, the different market quality metrics, to better align our incentives, their incentives, and the market maker incentives to lead to success of Nasdaq listed ETFs. So for example, if you are a DLP in a Nasdaq listed ETF with an average daily volume of less than 250,000 shares a day, our new program will incentivize the DLP on quote quality rather than volume traded in that ETF, which differs from the incentive structure for higher volume ETFs. Another key aspect of the program is the introduction of those market quality metrics that focus on ETF spreads, notional depth of book, and quoting at the national best bid and offer, or what we also call the MBBO.
And how has the introduction of the new DLP program impacted Nasdaq listed ETFs over the first few months?
Yeah, the program's been a success at improving market quality as a whole across all listed ETF names on Nasdaq. As you can see from the data that we're presenting here, our team ran a pre-post market quality analysis to look at the impact of the program before and after launch, which is shown in blue and gray. Gray representing the 3 months prior to the program's launch, and blue representing the 3 months after the program's launch, and looking at all of the market quality metrics that we added for the listed ETFs. So as you can see here, we've seen a reduction in the ETF's MBBO spread and the DLP's individual spread on that ETF at more than 2 basis points on average. Also, we've seen an increase in notional depth within 150 and 50 basis points of the MBBO from DLPs, specifically almost more than $50,000 more offered within those ranges on average within the 50 basis points of the MBBO. So this is important because it helps layered liquidity and reducing market impact for larger trades. We've also seen an increase at the time at the MBBO from the DLPs on Nasdaq, which is important to us as well in the program. And overall, we're pleased with the reaction and positive impact it's had so far.
And you mentioned the new and incubating ETFs listed on Nasdaq also being a key aspect of the program. How has the program impacted the subset of ETFs on Nasdaq?
Yeah, so this was a key focus when we were working with issuers and market makers when we were looking to restructure and modernize the program, because newer and lower ADV ETFs need a different support model from the liquidity provider standpoint, which is why we changed the incentives that I mentioned to reflect a more scalable approach for the market maker's business model. Also, as you can see in the data here, we looked at all ETFs listed on Nasdaq with less than 50,000 shares a day in average daily volume. And we see similar market quality impact in a positive way. So we see reductions in the ETF spreads from a DLP and MBBO perspective at almost more than 3 basis points on average per ETF, as well as an increase in the notional depth around the MBBO and that layered liquidity that I spoke about earlier, and also an increase at the time at the MBBO from DLPs on Nasdaq. So overall, we're really excited about the positive results so far in the program's launch, and we're looking forward to making more impactful changes in the future for ETFs that are listed at Nasdaq. And I think as a whole for our issuers, the program better reflects ETF market quality and what they care about for their investors, and promoting enhanced execution quality on Nasdaq, which at the end of the day leads to better investor experience when trading an ETF, which is really what the program was trying to accomplish. So yeah, we're really excited about it.
All right, Carlos, we appreciate the insight as always. Thanks for joining us on Trade Talks. I'm Jill Malandrino, global markets reporter at Nasdaq.